And he literally said, Bill, we can be friends now.
I never said that I want to be friends with you, Bill.
Okay, let's
I
move
wouldn't
on.
mess with you.
Carl Icahn, the most feared man on Wall Street.
He started with nothing, but built a fortune worth $20 billion.
Wall Streeters say he's intimidating and relentless.
Carl identifies companies that he thinks are undervalued, and he'll put pressure on the CEO to do what he wants.
The most feared corporate raider in history.
Activist or raider, call me whatever you want.
Whose investments have outperformed Warren Buffett for years. And Bill Ackman, hailed as the next Warren Buffett. These two are the giants of Wall Street, and when they clash, the entire market holds its breath. This is a billionaire battle on national television.
Like I told you, when I compete, hell, I'm gonna win.
Well, hear me. Game's not over, buddy boy.
A multi-million-dollar smear campaign, insider trading, FBI investigation.
Anyone you currently or have previously employed been contacted or subpoenaed by the Justice Department or the FBI?
No, I don't. I have no one at Pershing Square has been contacted by the FBI.
And taunting tweets that were borderline insulting to taking revenge through Herbalife.
I really sort of had it with this guy, Ackman. He's like the crybaby in the schoolyard. He was like one of these little Jewish boys crying that the world was taking advantage of him.
This is precisely what happened back in 2004, and since then, they've been bittersweet rivals. Their fierce battles became so widely popular that the media and news reporters and even a US senator had to step in to make sure things didn't get out of hand. Carl Icahn and Bill Ackman's rivalry is one of the most brutal Wall Street feuds in history. They're billionaires, they're powerful, and most importantly, one of them could potentially be the next Warren Buffett. And the other? Well, he could very well be better than the actual Warren Buffett. This is a wild story of one of the most nail-biting Wall Street rivalries of all time. Wall Street is a high-stakes arena, and with billionaires fighting their way to get the most returns, feuds are a certainty. However, this battle between two hedge fund giants goes all the way back to 2003 and 2004. The first time they got into a fight was over the company Hallwood Realty Partners. Ackman originally owned the investment firm Gotham Partners, which was the parent company of Hallwood Realty. According to Ackman, Hallwood Realty was severely undervalued, and when that happens, the natural course most investors take is to add another investor, a fresh set of eyes, per se. Of course, taking on a partner isn't easy in any business, but when there's the fear of bankruptcy, taking risks become inevitable. And this is precisely what Ackman did, and he made the harsh decision of selling Gotham Partners to Ichan. The price, however, was $80 per share, although Ackman believed it to be somewhere around $140 per share. This sale was finalized in 2003, and because Ackman was dealing with another major investor, the contract was highly well detailed. The one thing that Ackman took care of was adding a schmuck insurance clause in the agreement. And this clause made sure that if Icahn sold Gotham Partners shares within 3 years of their contract, Bill Ackman would get a 50% profit share out of it. And since this was a standard clause, especially in such massive deals, Icahn accepted the agreement. The very next year, Hallwood Realty Partners hired Morgan Stanley, an investment bank, to sell the firm, and later HRPT Properties Trust acquired it for $250 million. The profit was around $9 million, which Icahn had pocketed. However, because of the schmuck insurance clause, he owed Bill Ackman half of it. In a perfect world, Icahn would send over the money to Ackman because that is what he agreed to. But unfortunately, Wall Street deals are never perfect, and Icahn didn't send the money. His defense was that the firm did a merger for cash and took away his shares, but no shares were sold. Now, if we strictly talk about the contract clause, Ackman stated that the profit would be shared if the shares were sold. In a way, Icahn was right, but this didn't sit well with Ackman. And that is when the bad blood between these two legendary investors began.
Boom!
Bill Ackman instantly retaliated, suing Icahn for the $4.5 million he owed. This was a blatant call for war, and Icahn didn't hold back either.
Wags, you ready to become a wartime conciliary once again?
At every move, he appealed the case and tried to tip the scales in his favor. However, Ackman's case was strong because Icahn was only arguing on a technicality. From an objective point of view, the company was sold and so were the shares. Ackman did deserve his 50% of the profit. For 8 years, the legal battle went on. Icahn filed appeals on every jurisdictional level, hoping to sway the court in his favor. But they sided with Ackman. In 2011, Icahn was ordered to pay the original $4.5 million, along with 9% interest per year. This court order settled the first feud, but both of them weren't happy with each other. Ackman literally said that Icahn was difficult to deal with, and Icahn didn't share much positivity about him either. The sale of Hallwood Realty Partners set the stage for their seemingly permanent rivalry and all of their future interactions. It took 8 years for this case to come to an end, finally. They never wanted to go up against each other again because neither of them wanted to relive this experience. However, fast forward to December 2012, they found themselves on the battleground once again. This was the starting point of the infamous Herbalife scandal.
Herbalife?
Herbalife. I'm an Herbalife independent distributor.
What are we going to learn? You're going to learn why Herbalife is going to collapse.
Herbalife is a global nutrition company that Icahn had been supporting for years. Ackman, on the other hand, labeled it as an outright pyramid scheme.
What are you accusing Herbalife of?
Being a pyramid scheme.
This was because Herbalife had a multi-level marketing business model, and Ackman drafted an entire research report against it. And moreover, Ackman, being an investor who hardly ever taken short positions in his investment career, decided to take the risk to support his claims against Herbalife.
How much money have you spent betting against Herbalife?
Over $1 billion.
Short selling, in simple words, means
Imagine for a moment that a friend of yours collects rare coins, and you have the view that those coins are going to go down in value. So the way you would short those coins is you call up your friend and say, can I borrow a few of your coins? And he says, sure. And you borrow the coins. You then sell them $1,000 each that they sell for in the market at the time. And then you wait for them to drop in value. And you turned out to be right, and the coins dropped in value to $500. You go back into the market, you buy them back for $500. You've sold them for $1,000. You've repurchased them for $500. You've made $500 on each coin. And then you return the coins to your friend. Your friend is in the same place he was when he started, and he has the same coins that he started with. You might have to actually pay him something for borrowing the coins because he loaned them to you. You might pay him an interest rate. So he's happy because he's made an interest rate. It's made interest lending you the coins. You've made money profiting from the decline in the value of the coins, and that's short selling.
Herbalife stock goes down, we make money. Herbalife stock goes up, we lose money.
when Ackman's report was made public, Herbalife's share price dropped instantly.
Ridiculous assertions by people who are trying to manipulate our stock.
Ichan, as a supporter of the company, got into a fight with Ackman once again, and a high-level clash was inevitable. In fact, the public were looking forward to it, because their previous Hallwood Realty feud was quite entertaining. At least for the outside parties, just enjoying the legal battles. When Herbalife's share dropped, Ichan instantly purchased a massive stake in the company to strengthen the stock price. This move proved to Ackman that Ichan was doing this just to get back at him for their previous feud. For 2 years, a sort of Cold War went on between the two. However, in 2014, Ackman initiated a $50 million public relations campaign against Herbalife. And this pushed all the wrong buttons on Ichan, and the feud escalated. Bob Barr and Harvey Pitt, the former representative and former chairman of SEC, asked Ackman why he initiated his campaign. They suggested that he only wanted to crash the stock price of Herbalife instead of exposing them as a pyramid scheme. And the fight got so out of hand that US Senator Ed Markey was also made part of the issue. He called for investigations into Herbalife's business to see if there was any truth to Ackman's claims. And obviously, an SEC investigation negatively impacted the stock price of the company. Shortly after Senator Markey's investigation, it was revealed that Ackman had financially supported this investigation.
Listening to a report that was generated by a research firm in New York, and we've sent her a legal letter. This is a ridiculous assertion.
This was a fact, and it only raised more red flags. Everything seemed to point toward one thing. Ackman's primary motive was to make sure Herbalife's stock price took a massive hit. 4 years went by. Legal battles, litigation, appeals, and continuous efforts on both sides to damage and repair Herbalife stock kept going on. Then, in 2016, Herbalife decided to step down and agree to a settlement with the FTC. And this was a difficult step for Herbalife and Icahn, but the silver lining was that Ackman's efforts and financial aid and continuous scrutiny of the company would all go in vain. He suffered significant financial losses as a result of this settlement, and since the entire feud had played out in public, his reputation also took a hit. Yet the two of them didn't stop criticizing each other in public. Icahn said that Ackman was a crybaby.
He's like the crybaby in the schoolyard. He was like one of these little Jewish boys crying that the world was taking advantage of him. It's like in the old song, you rue the day I ever met.
And noted that his short position would result in a major loss. Ackman stood his ground, defending his claims and saying that he would hold his short position to the ends of the earth. 2 years after the settlement, Ackman was forced out of his position against Herbalife, because his short position only kept multiplying his losses. The stock price increased continuously, and people started to believe that Ackman made this move only to make sure that Icahn suffered financial loss. Fast forward to May 2023, the feud was reignited once again. This time by Bill Ackman through a tweet after Icahn's company stock came down 21%. In the tweet, Ackman said that despite Icahn believing in no friends on Wall Street, he really needs some of them. He has a lot of enemies, but he can use some real friends. And this tweet came after a report by Hindenburg Research, a short-selling firm accused Icahn Enterprise Partners LP of inflating asset values and causing his company to trade at higher premiums. It was said that IEP lost $10.9 billion in terms of market capitalization after the stock tumbled 21%. Ackman also agreed with Hindenburg's report and said that since Icahn had not disclosed the margin loan terms, which was against the SEC rules, it was quite surprising. On the other hand, Icahn said that Hindenburg's analysis was misleading and self-serving. He expressed his anger and noted that the report was solely made to hurt the long-term IEP shareholders. There were no other motive behind it. And because of this report, Icahn personally lost $15 billion, tanking his net worth from $25 billion all the way down to $10 billion. On this, Ackman wrote in a tweet,
IEP reminds me somewhat of Archegos, where the swap counterparties were comforted by each having relatively smaller exposures to the situation. The problem is that multiple lenders make for a more chaotic situation. All it takes is for one lender to break ranks and liquidate shares or attempt to hedge before the house comes falling down. Here, the patsy is the last lender to liquidate.
To date, the feud is ongoing. Ackman continues to make moves against Icahn, and he defends his position very strongly. Many say that these two could have gone their separate ways if Icahn had paid Ackman the $4.5 million he owed him in the first place. On the other hand, people say that this is a dog-eat-dog fight, which is never going to end. Nonetheless, the fact of the matter is that both of these investors are enormous players in the market. Carl Icahn has been named the most feared man on Wall Street and is often compared to Warren Buffett. The most remembered investment period of Icahn is between 1968 and 2011, during which he averaged a 31% annual return. In contrast, the great Warren Buffett only averaged 20% in the same period. Bill Ackman is also a key player, and while Icahn is compared to Buffett, Ackman is said to have become the next Warren Buffett. And this is why their ongoing Wall Street battle is the most legendary one in history. Now, I want to hear your thoughts on this. Whose side are you guys on? Is Ackman the bad guy here, or is the other way around? Please let me know in the comments below. And if you're interested in learning all about the stock market, check out this next video, where I explain the 7 rules to profit during a recession. Thank you so much for watching this video. I salute you, and I'll see you in the next one.